Money and Markets, and I'm Charles Boyd, your host. You are welcome. From the finance subsector, we're seeing banks making really good numbers, especially the top tier ones, many making profits northwards of 100 billion Uganda shillings. However, there are also a few that have struggled to actually make it in 2022. But the highlight for this are those that sit within the fintech space. We've seen some players like Momo Pay by MTN really ticking very important boxes on the profit side of things, making profits northwards of 100 billion Uganda shillings. But we'll be delving more into the issues and aspects within the finance subsector, banking to be specific, in our subsequent shows. Once again, it's Money and Markets. I'm Charles Boyd, your host. Welcome. First off, let's look at the broader economy. Of course, 2022 is the first year where we weren't interrupted by, the lockdowns and other COVID control measures that in the previous years, that 2020 and 2021, interrupted the economy quite significantly. So we're picking the mind of one of the players, an economic observer, to find out what drove growth and what lessons we can pick from 2022 to carry them with us in 2023 and hopefully 2024.
(2022) seemed like a year that we had been hoping for. We all assumed we were going to put the pandemic behind us and find some sort of return to normalcy. Unfortunately, if the past 2 to 3 years have taught us anything, it is that we must be highly adaptable to volatility and uncertainty. As I like to say, uncertainty nowadays is a certainty. According to data from the Ministry of Finance, the Ugandan economy grew by 4.7% during the year 2022, while both the Purchasing Managers Index and Business Tendency Index remained above the 50% mark. This was a signal of optimism and improvement in economic conditions. On the supply side, services and industry were the main drivers of economic growth. There was also a strong recovery in wholesale and retail trade, real estate and education, with industry rebounding through construction and manufacturing. On the demand side, private sector investments and private consumption headed towards the pre-COVID levels. The current account deficit widened to over 9% of GDP, primarily reflecting a deterioration in the terms of trade and a wider trade deficit. In the financial markets, the 2022 ABSA Financial Markets Index, which we presented at the beginning of 2023, indicated that Uganda's overall score from a financial markets perspective across over 20 competitor countries showed improvements, with gains being realized, and I wish to recap on some of the areas where Uganda posted tremendous progress. The first one is around market transparency, tax and regulatory environment, largely due to an improvement in factors such as ESG initiatives and standards after the central bank launched its strategic plan from 2022 to 2027, which focused on sustainability of the financial system and climate risk. Legal standards and enforceability was another aspect that led to the growth or strengthening of the Uganda financial markets, due partly to the existence of legal provisions for the enforceability of collateral and netting off. Uganda also recently partnered both with the European Union and Front Clear Management to support interbank transactions and further use of standard master agreements, which would bolster its score. Access to foreign exchange remains another pillar where Uganda scored very strongly. Uganda's score increased mainly due to an improvement in foreign exchange and interbank liquidity, and the score for FX reserves adequately also rose. Unfortunately, overall, we were also faced with increased inflationary pressures as a result of the higher energy prices, which slowed down growth in real consumption, reduced purchasing power, and limited credit growth as a result of reduced credit demand for a larger part of 2022. However, despite feeling all these effects, as Absa Uganda, we were powered by a drive to bring possibilities to life. We remained steadfast in our commitment to support our customers, even through these tough times. As a firm believer in the share value philosophy, our financial performance is not just a reflection of growth at Absa, but growth of our customers and all those within our value chain. As mentioned by our board chair, we remain profitable as a bank, closing the year with a profit after tax of 141 billion Ugandan shillings. This reflects a growth of 28.9% from the previous year and delivering a positive return for our shareholders. This leap in profitability anchors our position as a leading banking partner in the Ugandan banking sector. We are pleased to also report a significant drop in our impairments by 94% relative to the previous year. This is owing to an improvement in the construct of our loan book and the continued focus in business support and recoveries to any of our distressed clients. The achievement is one of which we are collectively proud of because it reflects our efforts to help customers regain and improve their ability to meet their credit obligations. As part of our shared value principle, being an active force for good in the economies that we operate in remains critical to the existence of Absa Uganda and the entire group. As a bank, we are cognizant of the large array of social challenges facing us, including economic development, job creation, quality education, and impact of climate change. Our commitment to being a force for good and sustainability journey that we have embarked on is driven by the philosophy to create a shared value in the communities in which we operate. By conserving natural resources and driving diversity, financial inclusion, education and skills development, and enterprise development, the bank contributes to the societies and natural environment in which it operates. We continued to contribute to skilling the youth through our Ready to Work program, which provides training courses that cover essential work skills, entrepreneurial skills, money and people skills. This program increases youth employability and supports job creation. And most important of all, it's absolutely free. All you have to do is log on to the Absa Uganda website and look for the Ready to Work program. So it's a program that is tailored at fresh graduates, high school graduates, university entrants, and university graduates. In terms of the outlook over the near and medium term, our projection is that economic growth will be supported by developments in the oil and gas sector and a rebound in agriculture output on improved weather conditions. We are already seeing a reduction in inflation over the first quarter, which signals better days ahead. We anticipate GDP to grow above the 5% threshold, as indicated by the central bank in their last policy statement as well, supported by declining inflation, appreciation of the shilling against the dollar, and continued economic recovery of businesses in both industry and services.